Hello and welcome to discussion on accounting. The focus of this session is to understand the effect of dividend on the financial statements. To recap, we know that the dividend is a distribution of profit. Dividend is not interest. Dividend is not an expense. And we also know that dividend is below the line item. And it is in this example or in this session, we will take an example with a given balance sheet and a set of transactions and understand the effect of the dividends on the financial statement and also other accounting indicators. So the opening cash in hand is 20,000. It says sold entire stock at a profit of 50% on sales. So 50% on sales is 100% on cost, is equal to 100% on cost. Therefore, when the stock is 26,000, the margin is 100% of the margin is 100% of the cost. So the margin is 100% on cost. So therefore sales is equal to 26 plus 26, 52,000. Sales is equal to 52,000. And let us assume that the sales is for cash. Sales is equal to 52,000, also a cash flow. Then operating whenever there is sales, there has to be cost of goods sold. So the cost of goods sold is 26,000. So the entire cost of goods sold, the entire stock will become the expense. So stock will not be there on the balance sheet. Operating expense for the period, operating expense is 10% of sales. So OPEX is equal to 52,000 into 0.10. Let us assume that this is also been paid, so is an outflow of cash. No other expense given, so let us recognize the interest or record interest on the bonds, and interest on bond is 12%. So interest is also an expense and cash flow. If we don't pay the interest, we have to create an outstanding interest, a liability. So we can sum up these expenses and find PBT, profit before tax, and 52,000 minus 35,000 and tax is equal to 30% of the profit, and let us assume that we paid the tax is 5,088. So PBT minus tax is PAT. So the profit available for distribution is 11,872 from the current profit. Will bring the opening profit, the opening reserves is equal to 40,000. So profit available for distribution is 11,000 plus 40,000 is a profit available for distribution as dividend. So we can write down this as profit available for distribution, profit available for distribution of dividend. Out of this, an interim dividend was paid. An interim dividend is a dividend paid during the year in between two annual general meetings. Since no transactions, no other expense given, we have determined the profit and then giving the interim dividend. So interim dividend is 50% of the capital. So 50% 0.5 and let us assume that interim dividend has been distributed or disbursed immediately. So the interim dividend is also cash outflow. Then a bonus share or a bonus dividend or stock dividend was also given. The stock dividend is 1:2. The stock dividend is distributed in the ratio of 1:2. So stock dividend, so the number of shares that the company is having at the beginning of the year is 16,000 divided by 10. The bonus ratio, stock dividend ratio, is 1:2, 1 to 2 or 1 for 2. So the bonus shares distributed is 800.5. So 800 shares. The face value of share is given as 10. So therefore the capital is 8,000 into 10, and that is treated as the dividend. So the stock dividend distributed is 8,000, and the stock dividend is not a cash flow, but it is added to the capital because it increases the number of shares. So the reserves available at the end, the closing reserves is equal to 51,000 minus 8,000 is the closing reserve, and the closing reserve will be transferred to the balance sheet. So the income statement is done. We can find the cash in hand now by deducting the payments from the cash available. So the total payments during the period is 22,000. So the cash available, which will be shown on the asset side of the balance sheet, is 49,872, and that is an asset. So we'll transfer that to the asset side, onto the asset side. Since no other transaction left, we'll close the balance sheet. No change in the bonds, no change in the creditor. The summation of sources is equal to 99,872. No change in the plant. As of now, we have assumed we have not charged any depreciation. So this exercise has been done assuming there is no depreciation. We may revise it. So the dividend, the debtors, no change. The sources of the business should be equal to the assets of the business. Suppose we realize that we have not shown depreciation, and in case we want to do that, we can also show it now as an expense, and let us examine the effect of dividend, examine the effect of the depreciation on the profits. Suppose we copy this. Let us copy this and take here. Now with depreciation and of 1,000 or 2,000 per year, the 2,000 per year. So the depreciation is an expense. We show depreciation as an expense. So the depreciation, which we have not taken in the previous exercise, will now take depreciation. So depreciation is equal to 2000 given. When depreciation is 2000, the accumulated depreciation will increase by 2000. The accumulated depreciation will increase by 2000 and the profit will decrease by 2000. The profit will decrease by 2000. So the profit will be now 37 is the total expense. PBT will reduce by 2000. Tax will accordingly change, and all other items will be affected because of depreciation. So once we have the depreciation, the profit available or the PAT during the period, which was 11,872 here, now it is 10,472, and then we use the profit available to distribute the interim dividend and the stock dividend. Now we can also calculate the book value per share. So the number of shares before and after, 16,000 divided by 10, 1600. At the end of the year, the number goes up. Equity at the beginning of the year, is capital plus reserves, and the equity at the end of the year is 58,000. So the book value per share is 56,000 divided by 16 and 58,000 divided by 24. So the book value per share has come down. We may ask why the book value per share has come down. The book value per share has come down because there is a bonus issue, and the bonus issue has been made in the ratio of 1:2. So therefore the book value per share has come down from 35 to 24. So every transaction, every business decision that we see or take up will have an effect on the financial statements. And the focus of this particular exercise was to understand how is the dividend, both cash dividend and the stock dividend, affects the book value per share. Thank you very much.